Traders, in today's video, I want to share with you what's happening with the interest rates, because I think there's going to be a really good opportunity for a good trade, or maybe even for an investment opportunity around the interest rates. A bit of a warning signs. I'm going to show you what we could be looking at for to see that potentially getting that pullback out of the markets as well, and obviously a quick look at silver and gold in the mining sector from there. But that's not the main part of this section. My video here is just to show you some other opportunities. Silver, gold in the mining sector, guys, you know it's done a lot of move. You've missed out. If you're trying to get in on, if you're looking for new opportunities in the markets, I think I've got a few things I want. No, I do know. I have a few opportunities that I know I'm going to really help you out with. So, traders, make sure that very first link in the description there, guys, is a link to a free training that I'm putting on. And in that free training, I'm going to literally walk you through all the details to an amazing high quality trading setup. In fact, it's the highest probability trading setup that I've traded over the last 20 years of trading. And also I'm going to walk you through how I was led down the wrong path, like most people are doing right now as well too. So let's have a look at this here. So, I'm looking at grab right now. Let's have a look at this here. So I want to share with you the interest rates, and within the interest rates section here, I'll bring up the good old trading view for this here, because I think this is really important to show you here what's happening with interest rates, because I think the TLT and TMF market, the bond market, could be finally starting to switch, and that's what I'm looking for. I'm looking for opportunities in that market right now myself. And I hope you can see, guys, like for me, what I'm always looking for myself is I'm always looking for that next opportunity in the markets there. I don't believe in short-term day trading. Short-term day trading, guys, is the worst form of trading out there. I personally used to trade, like day trade, and looking at shorter time frame charts and trying to take a lot of trades. You guys know yourself, right? That's just, man, that's the hardest form of trading out there. It's so stressful. You're trading a lot. You're having big losses and making mistakes and emotional, and you're getting tired, and then you're fighting with your wife, and you're not spending time with your kids, and then you feel like shit. Oh, it's hard, right, guys? So the best thing for me is when I switch to more of a swing trading basis, meaning I'm looking to get in and hold it for, for a couple of months, 2-3 months, and in some cases, like, a bit longer there. So if you're and because I'm always doing that, guys, I'm always looking for opportunities I'm always looking for the next opportunity here, right? So we know that swing trade is not going to work anymore on gold, silver, the mining sector. We know that's been done and dusted, and we know just by looking at this war sheet cheat sheet is that we're at the euphoria phase right now in silver and gold. So that's been done and dusted. Okay, I've made a lot of money out of silver and gold in the last couple of years, gold and silver and so on and so forth. But now my little spidey senses has been going down the marketplace of where's the next best opportunity, right? Because we all do know, smart investors know, we don't chase things that are already high. That's amateur trading. And again, you guys can do whatever you want to do, but I'm just trying to share with you what I'm doing myself personally to look for the next opportunities. And if we look at this here, we all do know the best opportunities is when the market is either no one's talking about it, where gold was through 2021 through to 2023 into 2024. Not many people wanted to get involved with it, right? And so that's the best opportunities for me. So looking at the euphoria phase, I see things happening right now with the interest rates. And this is where I'm really starting to hone down on this sector right now. And I have been doing now for the last couple of weeks to a month or so. And the reason why is if I bring up, let me show you this here. If I actually show you the rates, I think the rates right now are topping out. And again, for me, guys, I don't love any market out there. I think one of the biggest mistakes is people get so married to a market, like they're so focused on the debt bubble and explosion and gold going to 10,000. Like this, I understand it because there's so much euphoria out there. So I'm just trying to open up your mind to there's all these other opportunities out there. If we just focus on that, we can do really, really, really well from our trading, right? And that's what I'm doing for myself is I'm not looking to chase markets that's already high. I'm looking for the next market to start that next move, right? The worst thing to do is when market's already had a really big move, then you try to chase it, then there's FOMO, then you get it at the wrong time. And I'm pretty sure a lot of you guys know what I'm talking about there. So looking at the actual interest rate itself, let's look at the 10-year here. And the 10-year looks like it's actually starting to switch and starting to change. It's starting to like have a bit of a rollover effect. And the line in the sand for me, by looking at this is the 10-year. Let me take off the moving average here for a minute. As you can see, there's a bit of a line in the sand for me. And right now, we are doing something like this through here, right? That's something like that. Maybe something, no? Right, so let's look at this through here, right? So we do know that there's just been a little short-term little up move, and we've had this little move through here. So this is the weekly chart here, but we're getting like this bit of a rounding top here. So the reason why I show you that there is if I go back to, let me sync you in layout here. So this is the weekly chart to the left. Let's go to the daily charts here. And if I show you the daily charts and I start to bring on, the daily chart, we can see that through there. What's been happening now is we're starting to get if I bring on all my moving averages, so I bring on the 24, the 9, actually not the 9, more like the 52 and the 24, the momentum indicators that I have here. And so by looking at this level from here, and by looking at these momentum indicators, you can actually see what? You can see how we've actually been starting to troop down, right? You can see if you see the moving averages here, basically this entire year, notice how we haven't been really, I like to use the moving averages like a momentum indicator, and it really gives me strong where is momentum at that time. And so for example, you can see basically from here, see how they've all been pretty flat through there? Like there's just had this all flattening of move. The moving average has been pretty flat, volatile, haven't been fanning out, getting some momentum. But now we're starting to see what? There's the 24, there's the 52, right? So that's the first thing I'm noticing straight away. But also, we're actually starting to break down now. And this could be, we could start to see some really big acceleration. We could be at that, there's a tipping point happening right now, I believe, around the interest rates. And right now we can see that we're in a very nice downward sort of momentum through here. What I mean by that is that we can see that we were here, we came down, there's a lower high, there's another lower high, came down, another lower high, but we're actually coming towards this level here, which is a resistance. So we're probably, if this does hold and we start to do this, something like that through there, then if we squeeze our charts right up for a minute here, then we're probably likely to see a nice move of this overall move from here. And I wouldn't be too surprised to see this thing possibly even come back down towards the 3s, the 3% level. I'm just looking at that. And how I'm getting that, guys, just so you know, is I'm getting it from that major, there's all these major levels. So if we do start to break down from here, we're probably going to come back down to that level from there to there overall. And if we have a look at that from a retracement point of view, okay, from a low to high point of view, yeah, you can see how that through there to there, that's that major low, major high. So around 50%, so around about the 3s, possibly even low 3s. And if we look at that through there, that's when the market started going crazy. So somewhere around about there, it looks like it's going to happen. So if we start to roll over here, that's probably we're starting to see on the 10-year and even the 30-year. Right, if you look at the 30-year, look what's happening with the 30-year. And this is what I do for my trading, guys. Like, this is what's helped me do so successful, because I'm trying to look for those markets that's going to give me an opportunity of having a good couple of month move, And when you start to utilize things like options and you buy the right options, a bit of FYI for you guys, if you are trading options, right, I think the worst form of trading options is spread strategies and writing naked options like naked puts and naked calls. And the reason why is because if you're say writing naked put options, which means you're just selling the option there, one really bad month or one or two bad months can wipe out many months of that there, right? So I personally just like to buy the option and then ride the volatility with that through there. But on the caveat of that, if you're doing that, the worst thing to do is then try to go short term, like less than a month, and then out of the money because they're cheap. They are the ones that smack you hard, and then you end up having these big losses. So what I like to do is I like to buy plenty of time, right? Probably generally around 3 months, 3 to 6 months. I'm actually looking to get into 2 trades right now, and they're around about that 6 month worth of time. And I'm also buying in the money options. Yes, more time is more, they charge more, but the thing is, it's about protecting my account, right? That's the whole thing. If I get this wrong, then I want to try to get as much as possible. I want to try to get out of this for a good 20, 30% loss, maybe a 40% loss on a big loss through there. You know what I'm trying to say? So the thing for me, because I do know that when I do get it right and it does move, then these moves that last over a couple of months, I can pick up a good 200-300% return over a good 2-3 month period. But if I'm having a good 200-300% over a couple of month period, and if I get it right, but if I get it wrong, I'm down 20-30%. Do you see how I win at the game of trading with that? Those are sort of the average numbers. Now, it's not always that case. Sometimes I get out, like recently. Well, for example, SIL. I'm just giving you guys an example here of what I'm talking about here. My SIL trade, as an example, this was an example of one of those trades, right? So I got in here and I held it for a couple of months, and I got out for a 280% return. So that's an example of a trade where I'm trying to firstly, I'm looking for these opportunities that's likely to give me that return. But if I'm wrong, then I'm setting myself up. The way that I trade, this is what's made my trading so successful, is I'm setting myself up to make sure that if I do get it wrong, because I'm going to get it wrong and I'm going to have losses, right? So we need to focus on that. We need to do that. But if we're trading less than a month, we're buying out of the money options, this is where you can start to get 80% losses overnight. And it's very, very hard to get ahead that way. How I found good trading results is firstly a good setup, but then also making sure the way that I'm trading options is going to give me the best chance of trying to have a small loss. And then the way that I want to set myself up is that I want to see if I had an absolute horrible year and I was only 50-50 right. At the end of the year, I was 50-50 right, which lately I've been doing pretty well out of that. But if I was only 50-50 right, how do I still win at the game? How do I still have a good, successful year? And the way to do that is if I can have 20, 30, even 40% losses, but then the profits are like 280% return, 300% return, and so on and so forth. We can see how those numbers work. Now, thankfully, I've had a really, really high win-loss ratio. Out of the entire year, I think I've taken over 10 trades, a lot, and there's only been like 1 or 2 losses in there, and those losses have been small, and so on and so forth. So I hope you can see the way that I personally trade. This is the way that I trade. This is the way that I personally have found to have low stress in trading, because I'm not trading a lot. I'm just looking for these opportunities. Like, for example, SIL. I get into that, and I'm not looking to trade a million times. I get into it, I'm looking to hold it, ride it for a big profit, get out, and then go do it again. You know what I'm trying to say? Is like, I'm not a day trader at all. I've never made big money by day trading, but swing trading, by giving it time and allowing the momentum to kick in and being it for a couple of months, that has been the way that I've actually found to have really good, consistent results in my trading from there. And I hope you can see this is the reason why I trade the way that I trade. I don't always get it right, and we're gonna be wrong sometimes. What are you doing if you have a bad month and you have 1 or 2 losing trades? What are you doing to protect yourself to make sure next month and the month after you can continue to having a really good growth in your equity curve? See what I'm saying through there? Now, I actually have a trading group called the 1% group. It's a premium group where you're with me for a whole year, and I'm with you every single day for an hour. If this sounds like you and you really want to get access to me every day for an hour or so, what's inside the 1% group. Now, it's only a real small group. It's only around about 10 to 15 people right now. It's a real small group. So if you'd like to get more hand holding, and you like the way that I personally trade, and you like this lower stress, not a lot of activity, but trying to capture big moves and stuff like that, and the way that I teach here, which is I try to have smaller losses, bigger profits, high win-loss ratio, how to identify the trades, and so on and so forth, then you may be a really good fit for my 1% club. That's second link in the description there. There's an application form there. I've opened up a few spots. I'm not sure how many spots are left open. You'll be able to see when you go over there. But fill out the application form, guys, and you and I will actually have a good chat on the phone, and we can just go from there. So I hope you can see the reason why I'm saying that there is that I'm no longer interested in gold, because if we just look at the Warsheet cheat sheet, we do know we're up here. I want to be focusing on markets now that potentially are down through here. See what I'm saying here? So for me, I was really focused on gold a couple of years ago. Now it's like, I don't know. If it does keep going up, I'm guessing. I want the best probability. Remember, I want to have the best probability of having a good year. We want to have a good years, right? And so, anyway, for me personally, and I'm pretty sure you guys are the same, I can't have a really good successful year if I'm trading a lot. I'm just looking for these pockets of opportunities. So going back to the interest rate scenario, I'm trying to build the situation for you here. We can see this is that was happening on the 10-year. Now this is the 30-year as well too. We had this is the weekly chart to the left. This is the daily chart to the right. And look what's starting to happen already. If I open up my daily charts here and I zoom right in, look what's starting to happen already. All right, we're starting to get that type of action from there to there, as you can see. But if you notice what's happening through here, let's check this out. You'll start to see that we're actually starting to falter through here. So what I mean by that is, as you can see, look at all that level through there. If I open up my charts, there's a low, low, low. So we had this low, but look what's happening through here. So in a downward trend, the lower highs are the most important part, because if the market's going down, lower high, lower high, lower high, that's what we're looking for, right? So, but if we go to, see how we actually had there, and this was actually another lower high, then we actually dropped down to make a lower low. Now we're back at resistance level here. So this is a major tipping point for interest rates. If we start to go through here, then we can start to see a lot more of acceleration on the downside from there. And that gives us an opportunity to look at things like TLT. So the TLT, oh, actually, hey, did I just do something? Oh, yeah. A TLT or even the TMF market. So if I go to here, TLT or TMF is the one that I'm focusing on. Now, this is not, the reason why I'm focusing on this level here is, let me actually I'll bring up this chart here for a minute. You can see what I'm looking at here, right? So I see a lot of things coming at play here. One, the interest rates. Two, I'm seeing an actual amazing chart pattern. And three, I'm starting to see that this is now potentially starting to form into an uptrend from here. So I still haven't got my confirmation yet to be involved with these markets. So I'm not in these markets yet. If I do, I may just buy the TMF and then hold it, because I do see we're likely to go through there. Or I may not get in. I may not get in it at all. But there's actually a lot of opportunities that I'm seeing. Like, I'm looking for opportunities here. Makes sense? Because the TMF is where? TMF and TLT are down the bottom here. Makes sense? And so as things starts to go unfold, we do know there's going to be a reversion back to the mean when it comes to stock market, when it comes to silver and gold. And now I'm looking at markets like this level here. And so I think the TMF market is a gold mine right now. Over the next 6 to 12 month period, looking at that period, not a day trader, right? A 6 to 12 month period. And then we should start to see a rise out of that level as the interest rates start to peak out from there. So that's the first thing that that's one of the things that I'm really sort of focusing on, and I'm really sort of going down that path of. I do know the interest rates is that's the sector that I'm going down for there. And so if you do, firstly, guys, I must say this here is like, don't be just placing a trade based off this video here. It's like, oh, John's talking about this, let me go place a trade. That's not smart, right? Because I may not get into this at all. Now, the reason I'm saying that is that is because I don't have any proper trigger yet, and you can't get long-term success just trading off a YouTube video. It's never a good idea. So, and remember, all the risk is because of you. Remember, you click the button, so you're taking the risk. So, that's what I'm seeing through there when it comes to the TMF market from there. If we have a look at the overall stock market, let's actually bring up this chart here, and we just go through the overall sort of the markets itself. Then we can actually see that it's probably going to be a tough October for the good old equities, right? Having gold actually a little move up today. Oh, sorry, that's silver. If we have a look at where silver is, look where silver is right now. Very, 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 very close to these high points up here. You know it's up here, right? That's right. That's right. We never want to chase. Silver and gold are done for a while. Meaning it's like there's very little opportunities, and I guarantee you we're going to start to see a really good significant pullback out of these markets. And those who are greedy right now and holding on, or they're FOMOing in the market, are going to get their face ripped off. Me, I'm out of it from a trading perspective, and I'm now looking for the markets. And the markets, guess what? those interest rates, the bond market, now I'm focused on that level through there. And that's the reason why, and that's how I've looked for good opportunities, right? I'm scouring the markets to look for these opportunities. Before it was even before, it was just recently, it was Ethereum. Down here, I saw Ethereum having a big move and I got into Ethereum. And now I'm not getting involved with Ethereum. Now again, this is for trading, right? I'm in and out with a couple of months, big swing up, make a lot of money, next from there. Make sense? Now, one market that, or should I say, let's just go look at the equity market here for a minute. So this is the equity market here. And one of the things I'm noticing right now when it comes to the equity market is the equity market itself could be going into a state of correction real soon. And we do know that's coming, right? It's actually pretty common sense when you know, we do know there's going to be a correction coming. If you see how the markets work, right? Look at this here, up, down, up. Yeah, we may get a little bit more upside from here. We may get a little bit upside, but we do know what's coming soon, right? We're going to get something like that. And by the way, that's just going to be another good buying opportunity, right? So there's going to be another lemon. There's going to be something's going to come out that's going to cause a bit of a lemon in the markets. And there's going to be a freak out, and that's it. The top's in, and that's the crash is going to come, and oh my goodness, it's all over. That's it. The market's gone to zero. And that's going to be a good buying opportunity. And when you buy that, because you're not listening to the noise, right? And then you take advantage of that. But for now, one thing I'm looking for, one thing I'm focusing on is to see what actually happens here. Do we rally up? Do we keep rallying up from here? Meaning this level from here. Right? Do we keep rallying up from here? Or do we actually do something like this? And then we start to roll over. Because if we do something like that and we falter through there, then we could start to see quite a significant drop in the markets. That's the S&P 500. The NASDAQ is also the same as well too. We're getting a little rally from here, but what actually happens from here? Typically, these things will end of a bit of a pause and then a drop from here. And the same thing for the Dow Jones as well too. Now, if let me bring up this chart here. Right, and you can start to see this level from here. So these are all the indices from here. And I don't know what's going to come next, but one thing I'm watching for is to see if the market starts to produce a bit of a lower high here, right? Meaning we get this little, especially the NASDAQ, we get up, we get a little pause, and then we start to roll over. We're probably going to get a bit of a weakness coming out of the markets, which I'm expecting soon anyway, which we do know is going to come. Just look at these weekly charts down the bottom here. So same for the S&P, if we pause and then hold, pause and then hold, and then pause and then hold, we're probably going to get a bit of weakness out of the markets from that point of view from there. So they're the things that I'm really focusing on right now, guys. The big thing for me is I'm really focusing on those indices. I think we're going to get, I think as the market continues to go through a contraction, I think there's going to be recession fears of next year, should I say. And I think the best opportunities right now for me anyway, right now over the next couple of months, or maybe even for the next 6 months, one of the best opportunities as I see right now is the bond market because of the interest rates. Everything else is just too sky high. Everything else, I'm not chasing these markets. That's called dumb investing or even dumb trading. And I can't get a high probability of trading these equity markets, of trying to get a really big profit off my option trade if I'm going to be chasing something that's high, right? We need to find these gold nuggets that most people are not focused on. So it's not crypto, it's not the equity market right now, and it's certainly not that. It's probably the bond market. Now that's for right now, right? Over the next couple of months, it's probably going to be more opportunities and more opportunities and more opportunities. But throughout my year, I'm always scouring the internet and scouring the markets to see where's that opportunity where most people are not talking about. That's going to give me the best chances of getting in on a nice move for a couple of months. And then I can start to increase it from there. So if we just have a quick look at the oil market here, guys. As we can see here, the one thing I'm focusing on with the oil market here is the thing about the oil market that I'm noticing is that we're holding through here. Now, here's what I'm looking at when it comes. Let me bring up the weekly chart here. What could be happening is this. We're looking at the oil market. It's not happening yet, so it may not form. But what's happening here on the oil market is if we have a low here and this starts to form a higher low and we start to break up through there and we start to get a move like that, then this here is going to give us a classic false breakout to the downside. And if we do get something like that, then we're about to see a screaming oil market. Now, I'm a chart trader. I trade charts. I don't give a rat's ass, a flying pig's butt about the fundamentals. Because the fundamental, you are going to interpret the fundamental about opinion. I'm not a fundamental guy. You cannot trade fundamentals anyway. Trading is all about chart patterns and probability in the markets. And that's how you trade the markets, okay? So if you are adding fundamentals, you try to be too smart, and I promise you're losing a lot of money, right? So if you do like fundamentals, I'm not the fundamental guy. I'm about seeing patterns that repeat. That's going to give me a high probability of actually doing really well. Makes sense? And plus, you guys that want to add these economic things to your trading, it's only going to do your head in, and there's no consistency to your trading as well too. So that's what I'm looking at there. And this is the one thing that we're seeing here. If we do start to break up, we're probably going to get a big rise out of oil. And that's one of the reasons why, or not, no. And therefore my USO market that I've been focusing on for quite some time. Why? Look at this here. Just USO market is also the other market I'm focusing on right now. So the bond market is the one. Oil, I think there's opportunities coming real soon. See what I'm doing here, guys, and I hope you can see. This is one thing that's actually made me and also my 1% group, where you can apply for it, that link in the description. This is what makes us so successful. We're not actively trading all the time, but we're just looking for these pockets of opportunity. And no, I'm not going to make money every time. I'm going to get it wrong. But if I can start to have these things where I can have a good move for a couple of months, pick up a few 100%, maybe more on the profits, and then I have the losses, but I have a good balance ratio. You see how I'm setting the year up to win for myself. See what I'm doing here? And I guess one of the reasons what I'm doing is because I don't want you to be so focused on one market out there. There's so many opportunities everywhere. As you can see, I've traded platinum this year. I've traded Ethereum, which is a crypto individual stock. There's actually an individual stock right now that I'm looking to get into. I've already got orders in to actually get filled when the market opens up, opens up tonight or tomorrow. And I've already got, and that's an individual stock. There's one individual stock that I'm looking to get into that if it does work out, it's set to make a really big move over the course of the next couple of months. And when that happens, I'm probably going to pick up a good 2, 3, maybe 400% return. If it's wrong, then I might be down 20, 30%, maybe a little bit more. You see what I'm doing here, right? This is how I trade. Now, I hope you can see too, that one of the reasons why I trade the way that I trade, I want you to think about that from a numbers perspective, and the reason why I trade the way that I trade. Firstly, I'm trading this way, right? I want you to understand how I'm doing this, how I do this, and this is the only way that I've been able to do really well at trading. There's probably 1,000 other people out there that do really well day trading and trading a lot. I've never been able to make some serious profits out of the markets by doing that. But if you think about what I just said there for a minute, okay? Think about this here for a minute. I want to bring this to your attention here, okay? So the reason why I trade, firstly, I'm looking for opportunities that's likely to make a good move over the course of a couple of months. So let's just say, for example, I had a $100,000 trading account, okay? Let's just keep the numbers really simple here. And I knew that if I got into a trade, maybe an average loss would say 30%, right? 30% loss. So that means if I take out of my 100 grand trading account, I go put on a 10K trade, what would be my loss if it's a loss? Say 3,000, right? Maybe a little bit more sometimes, right? 3K. So, but I'm trying to get these numbers here. But you see what I'm doing here, what I've talked about today in today's session here. I'm trying to share with you why I do so well, because I take small risk and my account explodes in profits throughout the year, even by taking small risk. It's really good opportunities like I'm talking about right now, oil, bond market, before it was gold and so on and so forth. Just a couple months ago, it was the silver mining sector, gold and silver mining sector, like stuff like that, right? So if that's going to be the loss, so this here is going to be the loss, and that's a 3K, right? 3K, which is what? That's a 30% loss from the 10K. With me so far? But for example, if let's just I use the example of my last recent trade that I did, which is a really big profit, which was SIL. I made 280% return on that. So if that same $10,000 trade, I would have made 28K from just a $10,000 trade, right? Which is a 280% return. With me so far? So $28,000 profit. Firstly, really nice profit. But secondly, do you see how that one trade almost grew my entire portfolio by almost 30%? by taking around about 3% risk on the entire account. Did a light bulb just go off in front of your mind? You see how I do this? Again, guys, the problem with day trading and a lot of trading, it's like you might have the same profits, meaning like you might have the same profit targets and loss, you might have a 1-to-1. Like it's so hard. That's smaller profits and stop losses and lots of trades and mistakes and emotional and getting tired and fighting with the wife and not with the kids. And like over 20 years of my own personal trading, guys, I've been down that path. But I'm trying the best I can to look for these opportunities to try to give me this return here over the course of 2-3 months. Because if I can do that and do a good, nice return here, I can try to keep my risk on a trading basis anyway at a few percent risk there. Now this is on average, right? Even a big loss for me would be 50% of this. But even with a big loss, I'm risking what? 5% of my entire accounts. And that would be a big loss for me. I put it this way. I've had 2 losses this year. One was 40% and the other one was a 30%. That's all, but that's the only 2 losses I've had. Everything else has been big winners. 300%, 400%. If you've been watching me now for, you know what I'm talking about here. So you see how I'm doing this here, and I'm trying to include this into today's video because I'm trying to think, how do I help you see the long-term success in the markets and reason why I swing trade, because you can't get these numbers by trading a lot every single day, which you're going to have a low win-loss ratio, you're going to double your risk, you're going to triple your risk, you're going to make mistakes, you're going to get in when you shouldn't, you're going to get tired, you're going to have no life, you're going to have no freedom, and you're going to just, you know exactly what I'm talking about. That day trading where you look in front of the screen all day, that's always been the hardest form of me for trading. I'd never been able to have consistent back-to-back years like I have now for a long time by doing day trading. Now, here's what the best thing about the way that I personally trade and the way that this is. Do you know to do this, it only takes me about an hour, maybe 2 hours maximum per day of scanning the markets, monitoring my trades that I'm in right now, looking for new opportunities, building watch list. You know what I'm saying? Because I also have AI to actually help me out with these opportunities as well too. See what I'm doing here? So this is the reason why I'm so big on, like, I can't get a high probability that gold is going to continue off for another 2-3 months from here. Because it's just, firstly, it's not my setup, but I hope you can see here, I'm looking for these markets that haven't made big moves. And then if you look at the war sheet cheat sheet, if I'm looking for a high probability of doing that, that's what I'm looking through here. If we go have a look at the mining sector, right? If we go look at SIL here as an example, actually I'll bring this up to here. Right, you'll be able to see that from SIL, right? The reason why did I get into SIL before this big breakout here? Right, because we were just breaking out and we just went sideways through here. That was the time to get in. And then when the market goes up recently, that's when I get out of the market from there. And so there's as many opportunities out here right now, guys. And that's what I want. I want you to encourage you to focus on all markets out there. Don't be married to one particular view of like gold or mining stocks, which I understand, right? It's the noise, and that's where most amateurs actually think that where the noise is, that's where it's going to be. And you know that that's simply not the case. So there's the oil market right now that could potentially start to trigger real soon. Bond market looks like it's getting really heated up right now as I speak. Looks like we're at a major tipping point with that there. And even things like on a big long-term monthly basis, which is if I bring you up to, even like things like the energy sector. So XLE, and one of the stocks in the energy sector is XLM. Right? We're just holding here. So these are the markets that haven't triggered yet for me to have a trade yet. But once they start to trigger, like XCL, or not XCL, XLE, just like this level here, or we can see this chart here, we do, like this has a major probability. Once we start to break above 100 here, this whole what's called price and time, I'm a big study of Gann, and this here, when the market goes sideways, that's called refueling. Whenever we have a very strong move up first, then a sideways pattern, but the moving average is trending up, there's a high probability we're about to break and we're at least going to go for another leg to the upside. This is exactly what I use to call another leg in gold. It's the exact same thing, right? I call it the upside down, or in this case, it's the upside down L-shaped pattern with a strong moving average. Up and then overall sideways with a strong moving average. If I can get that combination, that's how simple it can be for your own personal trading. Because once I get that combination, there is a massive probability, not all the time, right? We're still going to have it times where it doesn't. That's where you want to jump in. You don't want to jump in too early. But there's a massive probability we're going to push to the upside and start to see at least another move to the upside. This is what helped me talk to you guys about. I'm seeing one more push out of gold. And why? If I go to the actual gold, if I go to the actual GLD chart here for a minute, or even just the gold chart, I'll just bring up the gold chart. This is the gold chart here, right? So the reason why I said we're probably going to have another move to the upside out of gold, and for you guys who have been watching my videos for the last couple of months, you would know I was saying I'm getting ready for one more push. I'm teaching you what to look for so you can look for these high probability trades yourself. What was that? It was what? See, it's called the upside. It's the upside down L-shaped trading pattern because it's a bull market. So we went strong up and then we went sideways. And then I use a 24 on my weekly chart. See how that was coming together? So it's an up and then sideways like that. And then if the moving average can come up like that through there, there's a high probability we're going to at least see another move like that. And this is the reason why we got this move to the upside. You see how simple that is? And this is how simple trading can be. A lot of traders, they really overcomplicate their trading, and they're overcomplicating all the wrong ways. And I've been there, right? My 20 years of trading. But I'm showing you a pattern here right now that is very simple to see and spot. And when it happens, it gives you a high probability that we're going to see at least another move to the upside. We don't know how much, we don't know how far, we don't know how long. But it gives me a high probability we're likely to see at least another move to the upside, and through that becomes a powerful high probability trading pattern. And then you start to overlay things like options, and now you can really, really, really kick ass. So again, the upside down L-shaped trading pattern with a strong moving average. Now, I taught you something really amazing there. So many people will take what I just taught there and they'll go, but John, the debt bubble, John, inflation, John, central banks. Or, John, the stochastics, John, and you'll add all this other crap to what I just taught you there. You don't need to. That's the biggest myth out there, guys. You've been lied to. You don't need a whole bunch of crap on your screen. You just need a powerful trading pattern that's going to give you a high probability of having a move. And then apply some good trade management techniques. Let me show you even more proof. Hey, what happened there? Let me show you more proof. What was the trade that I recently got out of for 280% return? And why did I get into it? And why did I stay into it? It was SIL, right? This is the weekly chart here. On the daily charts, one of my main moving averages is the 52 moving average. You probably heard me talk about that before. Let's go to the SIL. Let me show you what I see here. It's all the same thing, right, guys? Look at this here. Now, what actually happened? We had what? We had up and we had sideways overall. Now, sideways simply means, in a nutshell, is that we're just going sideways. We've gone up and the market's just done that, right? But it's just overall going sideways. See the moving average? What's this here? Upside down L-shaped pattern with a strong moving average. When you get that, there's a high probability we're going to see a big move. I started getting into SIL around about here. I held on to it because I saw a big move coming. We broke out. I held it for a couple of months. And then I got out literally up here. Like literally that's the spot I got out about a week ago now, as you guys know. But do you see how simple my trading is? And this is what's made me so successful, guys. And that's where, like, when you guys apply for my 1% group for me to actually coach you through, a 12-month period by being with me every day for at least an hour or more per day, I can really help you simplify your trading. And if you've gone through and see, I'm setting the game up to win. I have a simple trading plan. I have a high probability of having a successful trade. And I'm trying to get that situation where I can get those really nice profits and small losses. And if I can just focus on having a simple plan like that and have it done all in a couple hours per day, I succeed in a big way. I have freedom to do the other things that I care about. Like for me, it's fitness and boxing and high rocks right now as well too. And running as well too. Like there's a thing that I did just recently, and I'll show you here. Like literally just this weekend, and you'll be able to see this over here. I did this. This here is a this is a screenshot of me that I did just recently, and oh, I can't find it. Anyway, so I did a 10K race just recently, a 10 kilometer run, and I did it in 48 minutes. So just under 5 minutes per K. For you guys that are runners, you know what I'm talking about, right? So they're the other things that makes me happy. Spending time with family, my kids, friends, like having a balance. Because one of the things I found is that I need to, this is a trading style that fits my ideal lifestyle. If I can do this and throughout the year have a really good, successful year, and then to be able to spend time on the things that make me fulfilled. Making money won't make you fulfilled. It's important to make money, right? But making money won't make you fulfilled. Me going out there taking on challenges like a 10 kilometer race and doing it in 48 minutes, spending time with family, spending time with my friends, you know, going out there and challenging myself. Like I'm starting to do a lot of boxing training now because I want to do another boxing fight. I'm also signing up for another High Rocks event with me and a mate. We're going to be doing doubles at the next High Rocks. So I'm doing a lot of High Rocks intense training. Like these challenges on the outside. I know a lot of you guys might think this has nothing to do with trading. It has everything to do with trading. Because if I can take, and the reason why I'm saying this, what's the number one biggest mistake that people have that when they're trading, they're not patient, right? They can't just sit there and not do anything. Why? Because they want to take trade. I want to take trade. I want to take a trade. Why? Because they need that thing. But because I'm getting fulfillment outside the markets, when I go to the markets, I don't need to take a trade that feels significant or feel fulfilled. And therefore, I'm happy to wait for these opportunities from here. Make sense? So there's many markets out there, guys, and there's many things out there that are really shaping up to be really nice opportunities right now. We're going to see good corrections out of the markets real soon, but these bond markets, the USO, these are the markets look like the next shoe to drop soon, really soon. And there's probably going to be good opportunities for the next 3 to 6 months. And guess what? After that next 3 to 6 months, or as that's unfolding, and I'm benefiting big time from that, my account's going to go up. I'm going to make a lot of money from it. As I have proper trade management to it as well too. And then I'm going to simply do the exact same thing. Then after that's done and dusted, I'm going to look for the next opportunity and the next opportunity. And throughout the year, that's what I do from there. So now I do want to finish off today with just giving you a good bird's eye view of the big long-term charts here. Just to remember where we are in the big long-term charts. This is the Dow Jones 100 years logarithmic chart, okay? And this is where I want you to understand something. Most years we get these freakouts. Look at this here. Ever since 2015, we get these freak out period. And every time we've had these freak out periods, market's gone down 15%, 10%, 20%, maybe more, right? And guess what? It's probably going to happen again next year. We may even happen in October. We don't know, right? But as we can see, if we're looking for good buying opportunities, common sense tells you that next time we get a big freak out period and the noise is screaming, the sky is falling, you know they've been wrong 100% of the time. Right? Even if you go through the 2008 stock market crash, what actually happened in the big crash there? 12 months, 2 years later. So if you guys that are looking for buying opportunities in the markets, just wait for the next freak out, wait for the next drop, wait for the next, that's it, recession, that's it, it's all over, here we go, right? And that's what's coming. It is simple as that. Wait for the next lemon to come out, wait for the next freak out, and it's just simple common sense because we're in the middle of an AI. I'm seeing a big drop coming next year, by the way, in 2026. I'm seeing a very, very weak period where we could see the NASDAQ down as much as 30, 40%, S&P down another 20, 30%. But guess what's going to come with that? Right? If I show you the NASDAQ here, this is the NASDAQ composite, and this is the NASDAQ index. So as we continue up from here, if we get a push, that's all it's going to be. And then we're going to continue up from there. I don't see a massive crash coming next year. It's probably just going to be another good buying opportunity. Same for the S&P 500. S&P, look at this here. Every time we've had these freakouts. And this is what I'm saying, like, I want you to rewire your brain where if you listen to the noise, and that's, I got a comment just recently out of this actually, by the way. I'll show you this here. Because I didn't quite understand this. And it wasn't until So let me show you this here, right? Look at this here. So I said here, I saw this comment today. Oh, actually, I'll show you the comment here. Right, this person here, it was one of my short videos that I did, and I didn't understand. People just don't get this, but if you're new to the markets, you would think logically that this makes sense, but it's actually the opposite. And this is why most traders have a hard time getting in trading, right? Because they follow the noise. I said, this comment here said, if you are loading up on gold, or if people are loading up on gold, silver, and crypto, is that not a sign of anything to get in before it launches? Question mark. So this is what he thinks, right? He thinks everyone's talking about oh my goodness, there's so much noise, get in. Right, where are you in the Wall Street cheat sheet? Euphoria, right? And XRP has been adapted by NASDAQ, but you think it's a bad trade. See what he's doing here? He's using some sort of external event. See, this is the reason why most people don't make money in the markets. I just walked you through a powerful, simple trading pattern. Nothing to do with inflation or data or anything like that. Because guess what? For a trading opportunity, even if you are trading the daily chart, even if you're trading the way that I'm looking, what we're looking for is we're looking for an opportunity to get in and have a nice move for a little while. Whether it's for a week or two, in my case, or a couple of months, in my case as well too. I'm just looking for a nice move, high probability of a nice move, and get out. But why are we adding the debt bubble exploding and then trading the markets like that? It's like, it just doesn't make sense. Same with this guy. See what he's doing here? He's using, NASDAQ is adapting, but you think it's a bad trade. See, he's now entering the market based off, I think it's going to be good for XRP. It should be good, right? Like, NASDAQ's, surely it's going to go up. See how it's so much ifs and buts. There's no success in that. There's no long-term success in that, right? What is the long-term success in the markets? I'm telling you right now, guys, like I just focus 90, I'd say 90+% of my trades. And guess what? I just walked you through the simple pattern that works most of the time. And if we can just remove the clutter and the clap and simplify our process, we can do really well and enjoy our life, have a bit more freedom. But then people want to go down the road and people wonder why they don't do well out of trading, because they're not trading based off rules. They're trading based off, well, everyone's getting the crypto, so it should go up, or everyone's getting the gold and silver, so surely it's going to go, surely before it launches. And see, this is the biggest mistake here. And so what I said here was, I saw this comment today on one of my YouTube videos, and this is why most traders don't make it. Their thinking is wrong. Most traders struggle because they don't grasp one key market dynamic. Crowd sentiment usually signals the opposite of what feels logical. Meaning, well, it feels logical, right? If you're new to the markets and everyone's, gold, silver, or before it was crypto. You see what I'm saying here, right? So logically thinking, oh my goodness, everyone's talking about this. This thing's about to go to the moon. And guess what ends up happening? It has a big donut on your face, right? The logical brain thinks everyone is buying gold, silver, crypto. That must mean it's a great time to buy. But in the markets, when everyone is excited and piling in, it's often near a top. Smart money is usually selling into that euphoria. The flip side is just as powerful. And I talked about this today in today's video, right? This is the reason why, guys, I was like, I'm trying to show you, like, if you're looking for good buying opportunities, you don't buy when there's a lot of euphoria in the markets. That's the worst time to buy. Just look at the market itself. We know that, right? Look what I just showed you on the stock market. When was the best time to buy? When there's a lot of fear. So wait for that. In the next 6 to 12 months, there's going to be another one of those lemons. If you're looking to buy the market, wait for the lemon and have a good... Yeah, that'd be a much better strategy than getting in. Yeah, right? The flip side is just as powerful. When the fear is extreme and nobody wants an asset, like the tariff situation this year, right? What was happening in the tariff situation? Oh my goodness, it's the end of the road. It's going to keep going down. And guess what? It was a massive buying opportunity, and away we go. That's often when the bottoms are formed and real opportunities begin. Hence the reason why, like, for example, the bond market. Bond markets, people hate the bond market. Like, they've been getting crushed the last couple of years, right? But now look what's happening. Now we're at that, oh my goodness phase. And so professionals plan ahead, buying when it's quiet and trimming when the crowd finally notices. Why do you think I started to, or I did exit my trades on silver in the last couple of weeks, and even my SIL. I don't know when the top's going to be, but we're getting very, very, very noisy here, and I'm not going to try and pick the top. No one knows where the top is, and I guarantee you when you do pick the top, you get a bit of fat, you get a big fat donut on your face. And it's not nice too. Like, I know you might say, oh, John, I hope I get a donut on my face. Some of you guys are saying that anyway. Please, strawberry cream, chocolate, glazed. I don't know. I don't normally eat donuts. I'm just thinking, yeah. Just trying to be polite and it's good. Understanding this single principle can transform how you trade and keep you from getting trapped with the herd. Great explanation, John. This one here. It all comes down to what your system is. I've been hearing about gold in the mainstream for 6+ months now, constant ads, and yet gold was moving sideways for most of that period. Then it broke out and went $400 higher, then sideways, etc., etc. Now the trade is over. XRP is another beast. Okay, right? This one here as well too, right? I read that comment before you posted this, John, thought the same thing. I've been heavy gold miners. Account is now up for the first time in years. More so down over the last few months, but took a big risk. Learned that, only to export and trade, etc., so on and so forth, right? So I hope you can see here that the purpose of finishing this video off with what I'm talking about here is if we want good buying opportunities in the markets, and this is what's made my trading so successful, guys. The worst time to buy when there's euphoria and things have been going up for a while. We do know that. What do I trade? I actually like to trade firstly. I like to trade when there's fear in the markets. Why I'm focusing on oil right now. It hasn't been doing much. No one wants to talk about it. Why I'm focusing on the bond market right now, right? People hate the bond market. It's like, oh my goodness, the bond market is dead. And people have been thinking bond market, so on and so forth, right? The worst thing to do right now is trying to chase these markets that are ultimately higher. And the same, this is the big long-term monthly charts out of the monthly charts here. Mark my words, guys, over the next 6 or so months, 6 to 12 months, over the next 1 year, right? And it generally happens once a year. Generally, once a year, we get these big fat donuts, meaning the market goes down 10, 15%. Fear and greed index pings the fear. The recession talks come out. All that sources come out. And that's the time to go, la, 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 noise, 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 noise. Do the opposite. Because when people are greedy, it's time to be fearful. What's happening in a lot of markets right now? As Warren Buffett says, and guess what? When people are fearful, just like it's been proven by facts on the charts, when people are fearful, that's the best time to